Thank you so much for your patience, my dear friends. Everyone, thank you so much for joining today. Give me just a few more seconds. I just need to make sure that the video catches up and that we can continue with our presentation for today. Well, since you can definitely hear my voice while we are waiting for the video to catch up, I would like to go ahead and let you know, for example, the promo code for this week. I'm going to go ahead and put it in chat right now as well. It is safe and then the number 35. You can see it in the chat right now. This promo code you can use whenever you are making your deposit. And this will add plus a 30% to your deposit. And this promo code works on until next Monday. Next Monday is going to be Monday, the May the 18th. Okay, I do see that the platform has pulled up. Let me just go ahead and since everybody's here. Now, I'm not going to be showing my video. I'm not going to be showing my face, but it's okay. We'll go over our presentation for the time being. I do hope that everything, you can hear me well and that you can at least see my display. Alrighty, my friends, so let's go ahead and get started. As I mentioned before, this is a part 5 in a series about Forex. Previously, we spoke about the Forex online trading platform, basically where you can find everything. Where you can find the different assets, which is in the upper left corner of the platform. We spoke about the different parameters, so definitely check that stream out. We also spoke about fundamental analysis, which is like macroeconomic data and the economic calendar, like political tensions, maybe different speeches and so forth. We also discussed technical analysis, which is like the study and observation of the price chart and the price movement history, and also different indicators. And then we also discussed money management, a very, very, very important topic for every trader. That was last week. So check out the playlist. It's available on our YouTube channel. And also I have included the link to the playlist in the description of this video. Now, my friends, just a little recap. One more time, let me go ahead and show you. Our promo code for this week is going to be SAFE and then the number 35. You can see displayed on the chart right now. Plus 30% to your deposit, works until next Monday. And also, my friends, for anyone that's new and joining us for the first time today, please make sure that you are subscribed to our YouTube channel. Go ahead and click on the red subscribe button. Give me a thumbs up, show me your support if you like this stream, and ring the bell so that you don't miss out on any important and new notifications. And also, whenever we are starting streams, you would get reminders. So definitely don't forget to subscribe to our YouTube channel. And now I also want to mention, my friends, this is our second stream of the week. So when we talk about Forex, and I also want to mention once this stream is complete, the video is going to be on our YouTube channel. And I would like to go ahead and ask you to go ahead and leave comments below this video. You can ask different questions. You can let us know if you have any questions about, for example, this topic stream, or basically let us know if maybe share your trading strategies and so forth. Basically, leave your comments below this video. Make sure that you include your account ID number that you have in your profile right here. And next Tuesday, it's going to be May the 19th. We are going to continue our streams on FTT, that's fixed time trading, and give out a risk-free trade. So don't forget to leave your comments below this video. Also, just a quick little very brief overview about the Forex online trading platform. Don't forget that with Olymp trade there is no spread, so the price that you see on the chart will always be the price of the trade opening and trade closing. This is really, really awesome. Also, there is no double rollover commission with Olymp trade as compared to classical Forex, and the rollover commission is basically like a interest rate charge for keeping your trades open overnight. So no double rollover commission is really, really great for traders who like to keep their trades open for several days. There is a commission for opening the trade. You can always see the commission prior to opening the trade right here. And of course, don't forget that you can get more information about the online trading platform in our first webinar of this series. Let me just go ahead and check in chat. Okay, I do see some comments in a different language, but hello and everybody, welcome. Adeloya Joshua, please, I still don't understand FTT. FTT, Mr. Adeoli or Joshua, we do have a separate stream earlier in the week. We have a playlist on our YouTube channel. It is called FTT, Fixed Time Trading for Beginners, and we have weekly streams on that, so please definitely check it out. And now, okay, let's go ahead and proceed. Now, okay, so whenever we are, this was part of what we discussed in our last week's webinar when we spoke about money management. You see, now with Olymp Trade, the maximum amount that you can lose, potentially lose, is the amount of your trade. Regardless of how much you have on your account. So you can see here I have close to $8,000, but if I open my trade for $100, $100 is potentially the maximum amount that I can lose. And therefore, the stop loss, our stop loss, will automatically be set to the amount of the trade. Now, we can adjust our stop loss level to minimize our losses. What happens after that is that we can then adjust it to make our trade break even. That means no losses and no wins. And then after that, we can also make our stop loss profitable. Now, this sounds great. The question is how to do this correctly. And we are going to look at some examples in just a second. Now, a few things that we want to remember when we're looking at the price chart. There are three things that can be happening on the market. We can have an uptrend. This, whenever we have an uptrend, this means that bulls are in control. This means these are called long positions. We can also have a downtrend. This means that bears are in control, and sell trades are also called short positions. And we can also have what's called a flat, where the price is moving sideways. This means that there is indecision on the market and neither buyers or sellers are in control. Whenever we are setting our stop loss, we can, for example, use the maximums and the minimums, which is also called the highs and the lows of the price movement. We can also, for example, use trend lines, and which also, of course, act as levels of support and resistance. We can also, in some cases, use the moving average. And we can also actually use indicators like the Fibonacci levels, which can help us with setting our take profit and stop loss levels. And of course, I'm going to show you these examples in just a few minutes. Let's go ahead and proceed with our examples and our presentation. Alrighty, so here I have a few examples for you. This example is of a buy trade. For example, you see we have an uptrend. I have a trend line up. And I see that the price has retraced to the trend line, and I opened a buy trade because I believe that the price is going to increase. It's going to bounce from this level of support. And as you can see, right here is where my stop loss is. It's slightly below the last minimum, the last low, and it is also slightly below this trend line up. Another thing that I would like to show you is that, well, first, these examples, I'm going to show you how to probably set the stop loss and take profit, which we also went over in our previous stream. As you can see, I have my stop loss is at 50 and my take profit is at 150. This is a risk to reward ratio of 1 to 3. So here I have another example, and this is an example of a sell trade. Here we see that the price is breaking the trend line up, and also it's moving below the moving average. And I opened a sell trade to the downside, and I placed my stop loss slightly above the moving average, which is also slightly above the trend line that was just broken. And therefore, if the price starts moving against me, my trade will close with stop loss minus $44. And as you can see, my take profit is $132. And once again, my risk to reward ratio is 1 to 3. And another example that we have is basically when the market is moving in a sideways, in a flat, so it's moving sideways. And basically what we have here, we have a level of resistance and we have a level of support. And basically what we have here, as in my example, we have a buy trade. We enter a buy trade from our level of support whenever the price bounces from support. We place our stop loss level slightly below the level, this horizontal level of support, slightly below it. And we set our take profit to slightly below the level of resistance, so that we don't miss out on this profit as the price starts to move back down. So basically, whenever we have a flat and the market is moving sideways, it's usually moving in within a channel of resistance and support, and therefore, if we are not watching our trade, if we're not paying attention, if we need to go to the grocery store or whatever the case may be, if we don't set this take profit, for example, the price can move up here and then it's just gonna go back down here, and basically we missed our chance to collect our profit. So definitely don't forget about that. And here's basically just another example of a sell trade in a flat. So basically, once again, we have our level of support, we have our level of resistance. The price reached resistance, started moving back down. I set my stop loss to slightly above our level of resistance, minus $50. And I set my take profit to slightly above our level of support, not to miss out on this movement, and to collect my profit at $150. And once again, our risk to reward ratio is 1 to 3. And also, whenever we're working like within a tight range or within a tight channel, you can also use a risk to reward ratio of 1 to 2. So basically, if your stop loss is $50, like your take profit can be $100. So that would be risk to reward ratio of 1 to 2. Now, let's go ahead and look at another example of how to use this on a trend. By the way, whenever we are working with a trend, you want to keep in mind that if you have a take profit order set as well, you may want to adjust it with your stop loss in the direction of your trade, because with Forex, your profit depends on by how far the price moves in the direction of your trade. So therefore, as you're moving along with the trend, you can either not set a take profit or set it maybe a little further away, so that, you know, as the price is moving along, and if you think it's going to be a nice long trend, you can take advantage of that whole profit. So don't forget to adjust the take profit along with your stop loss. So basically, we have have an example right here for you. This is Euro and New Zealand dollar, 4-hour time frame, and basically here we have a downtrend. So this is what happens. Basically, we enter a trade right here, a sell trade, and we set our take profit to slightly above this last maximum, this last high. The price retraces and then it moves down again. Whenever the price moves down to this level, we can then take our stop loss and drag it down to the level of the price, the trade opening. taking into account the commission of the trade opening. So you'll see your stop loss. Basically, it's going to be displayed as 0. Then you can see that the price retraces a little bit and then it moves down again. Now, whenever the price moves down again, what we can do is we can take that stop loss that we moved down to the level of our trade opening. We take it and we drag it down to the next level, to that last maximum or to that last high. And by doing this, our stop loss basically I would say becomes a take profit, because if the trend changes and the trade starts moving against us and the trade closes, basically it's going to already close in plus. It's already going to close in a profit. And basically we can continue doing this as the price moves down, retraces, moves down, retraces, moves down, retraces. And so basically we move along with it and move along with it and move along with it. Basically we just adjust our stop loss down on a sell trade and up on an up trade. So I don't know. I think this technique is really awesome because, I mean, think about it. You are changing your stop loss order into a take profit order. And if the trend changes, our trades and our trades close with stop loss, your trade actually closes in profit, which is really awesome. And basically here we have another example of a buy trade. And what we can see here is that we enter our buy trade right here as the price moves, breaks this trend line down and moves above our moving average. We set our stop loss. Give this window just a second to leave. It would basically set our stop loss slightly below this minimum. We can see a little bit of a consolidation. The price rests a little bit, and then the price moves up again. So what do? Remember, we take our stop loss and we adjust it to the level of the trade opening, minding the commission for the trade opening. So basically to our 0 level. Break even means neither profit nor loss, just break even. So 0, which is great also. And as the price moves up again, we can then adjust our stop loss. And here in this example is where I'm showing you how we can use the Fibonacci levels. As you can see, we have our Fibonacci levels. We had a change in trend. We had the change of a downtrend into an uptrend. The levels that we're watching is 23 and 6, 38 and 2, 50%, 61.8 as well. And what I would like to show you is that as the price moves up, we adjust our stop loss level from the level of our trade opening to slightly below 23.6. Then we have a consolidation. The price moves up and we move our stop loss to slightly below 38.2. And as the price moves up, we move our stop loss to slightly below the 50% Fibonacci level. So my friends, this is basically how we would use the stop loss feature, and how we can adjust our stop loss to first make our trade break even and then to make it profitable. I wanted to show an example here. Let's see here on a 4-hour time frame. This is not an ideal situation. I opened a trade yesterday. This was our trade on Tuesday. It wasn't what I wanted to show you either. Market is very unpredictable. But basically, I opened my trade for $100. I opened my trade up here. As you can see, the moving averages were, the price was above the moving averages. It looked like a cross of the moving averages, and I opened a buy trade. Excuse me. And I basically wanted to show you how I adjust my stop loss. But in this situation, I can still show you. I'm still in the game. We do have a flag here that the price is moving. This is Euro US dollar on a 4-hour time frame. And as you can see, my trade is for $100, but I have minimized my losses to $32. It's slightly above this support level. I'm still hoping, well, the pictures not looking as good as I was hoping, but I'm still hoping that we are going to return to the upside. What we are going to see, we are going to have to see. But this is a good example of a risk to reward ratio of 1 to 2. My stop loss is 32. My take profit is 64. So we'll have to check that out at our next stream. And now, my friends, just one more time, let me go ahead and remind you that your promo code for this week is going to be SAFE. And then the number 35, you have it displayed on the chart right now, plus 30% to your deposit. And the promo code works until next Monday. Next Monday is going to be May the 18th. And of course, my friends, if you are not subscribed, go ahead and click the red subscribe button. Give me a thumbs up, my friends. Please show me your support and give this video a thumbs up and ring the bell so that you don't miss out on any important notifications. And my friends, don't forget to leave your comments below this video once it is posted on our YouTube channel. And don't forget to include your account ID number. And join me next Tuesday when we speak about fixed time trading. And we are going to give out a risk-free trade.